our insurance redefine report that we are going to launch today, two of the things that insurance CEOs are going to invest for the next few years are first, partnerships, second, technology. So I think this is where I think the collaboration with the Life Insurance Association is timely, because for Singapore FinTech Association, we have more than 850 corporate members. So basically, every 4 out of 5 FinTech companies in Singapore are our members. In fact, with 40% of all the ASEAN FinTech companies based in Singapore, 1 out of 3 ASEAN FinTech companies are in Singapore. So with the collaboration, LIA could work with our InsurTechs, but also could work with our other FinTech members. Because another finding of the report is cross-selling is actually more effective on banking apps than on e-commerce or super apps. So I think there are plenty of chances that both associations can collaborate more. So I look forward to the partnership with LIA. Thank you.
Thank you, Mr. Chia. Next, Mr. Kor Hock Seng, President of LIA.
Yeah, thanks. I think 2020 has been definitely a very challenging year for businesses and individuals alike. For the past 8 months, or since March, when the World Health Organization formally declared the COVID-19 outbreak a pandemic, the life insurance industry top priority was in engaging Singaporeans to receive the protection they needed to get through the health crisis. For most, if not all, the life insurers, the digital transformation of their business operation began a few years back. It was these proactive measures that enabled us to service and stay connected with customers during the circuit breaker and phase 1 periods when our physical location had to be closed. Indeed, digitalization of the life insurance industry has been especially critical in ensuring that we are able to continue not just meeting, but anticipating changing customer needs today in a post-pandemic world. For quite some time now, tech-savvy millennial and Generation Z consumers have shown that they are comfortable with digital means of communications and commerce. COVID-19 has accelerated the adoption of online services for more matured audiences too. As the Future of Insurance report unveiled today shows, Singaporeans are more open to accessing financial services online. Approximately 4 in 5 surveyed said they are open to using internet platforms for either researching or purchasing insurance. Indeed, the deepening of ties between the Singapore FinTech Association and the Life Insurance Association is a leap forward, not just the life insurance sector, but for Singapore's standing as a global FinTech hub. By embracing innovation such as artificial intelligence, data analytics, and machine learning, to name a few, life insurers continue to improve product innovation, personalize the customer experience, and increase efficiency in operations and processes. The proper management of big data also means that more so than ever, we are able to analyze healthcare expenditure, which in turn help us predict and plan for future healthcare needs. An area of particular focus for us is managing rising medical costs in Singapore. Medical inflation here has outpaced both general inflation in the country as well as medical inflation rates across Asia Pacific. By combining our knowledge of customers' health and fitness data with their medical records, life insurers can work more closely with these individuals to effect better health outcomes, as such playing an important part in controlling medical inflation for more sustainable premiums. Singapore has been named the world's smartest city, and we are well on our way to building a world-leading smart financial hub as well. It's now time to accelerate the growth of our smart life insurance sector, and we look forward to this partnership with the FinTech Association to further this direction of being a smart life insurance sector. Thank you.
Thank you both. Now I would like to invite both of you to please pick up your pens and sign on the MOU at your respective sites.
Thank you. Look forward. Yeah. Thank you.
Congratulations once again to Mr. Chia, the SFA, and Mr. Kaur, the LIA. Next, I would like, Now we will actually be moving on to our panel discussion and white paper launch. Moderating this panel today will be Mr. Chia Teck Yew, partner of Oliver Wyman. Mr. Chia.
Thank you. Can you hear me?
Yes, we can.
All right. So, thank you, Mr. Chair and Mr. Kaur, for gracing the occasion and getting us really started on the program of collaboration between LIA and SFA. I think it's an opportune time that we have developed a FinTech, a InsurTech report, where we are looking at the future of insurance and the implications for INSURTECHS. And clearly, signs of collaboration is shown in the plans that will be unveiled. I would like to invite Angad Sandhu, a partner in Oliver Wyman and head of the Asia Pacific region insurance sector. Angad will go through a short presentation on the findings from the report and will share that with the team before I invite the rest of the panelists to comment on it. Mr. Sandhu, can you start with your presentation first?
Sure, Teck Yew, and thank you to the SFA for the opportunity. I'm sharing my screen, so I just want to check Teck Yew and the panelists. Are you able to sort of see the screen?
Yes, we can.
Yes, we can.
Excellent. Okay, so I think firstly, a quick thank you to all the participants, specifically the SFA, as well as the constituent members of the LIA, a number of the other C-suites across the region that contributed to this. I'll sort of share over the next 10 minutes a few snippets, and then we'll pick up elements of the findings in the discussion. And so for us, the starting point was to actually look at the performance of the sector globally. And what you see on the page is when you look at the shareholder returns and you look at the price to book multiples at which a lot of the insurers trade over a 5-year period, I think there's a few things that are telling. Number one is some of the INSURTECHS have clearly outperformed from a return perspective. Secondly, you see the blue squares, which are sort of the brokers and distribution players. They have done exceptionally well as well. But what's fascinating is that almost all of the balance sheet businesses across life, health, GI, composites, and reinsurers, they've had a more challenging time. Now, part of this could actually be that the technology players have benefited from the tech boom that's happened, but we believe there is something more macro and structural behind this. It is that not only is the macroeconomic environment becoming more challenging for insurers to deliver outsized returns, but the sector as a whole really needs to reinvent itself to become much, much more meaningful for consumers. And we'll sort of touch on what we think some of those imperatives are. We think there are 4 key megatrends that will shape the future of insurance. First and foremost, economic and demographic changes. And so the economic side, I already referenced the low interest rates, which are challenging the economics of the sector. But I think what's also where there is opportunity is with urbanization happening in developing parts of Asia. As wealth levels grow, so will the need to protect one's assets and one's loved ones. And so that'll continue to provide opportunities for insurers to help consumers in their time of need. From a demographic perspective, as the populations age, their demands and needs would change. And I think it'll be imperative for insurers to redefine propositions that better meet the demographic sector's needs. Secondly, there is a massive sort of change in consumer behavior. And as Mr. Kaur and Mr. Chia mentioned, during COVID, we've seen instances of where people thought the adoption towards digital may not be as fast. It defied expectations. So consumers' expectations of the level of experience they want, what they expect of their service providers, that has continued to change, and their expectations from insurers will be the same. I think thirdly, as we saw during COVID, a lot of consumers were becoming much, much more comfortable in using digital channels. But I think the implication for insurers is that there's actually a blurring of the traditional siloed channels that exist. Historically, insurers have thought a lot about, bank assurance and agents and direct as sort of separate. I think in the future, what we will see is insurers will need to be able to much, much more seamlessly serve customers per their preference, and we'll see the channels become much, much more blurred, and almost all of them have a digital core to them. Finally, the largest change that is upending the sector is the technological advancement, and this is where a lot of the InsurTechs come to the fore. I think it's widely known that the insurance sector, it is trying to digitally transform itself, but it's starting from a position of having myriad of legacy systems that cause the pace of change to be slow. So how the sector embraces this, the new advances in technology and data analytics will be key to its future. So whilst those were the 4 megatrends at a macro level, we shared some perspectives in the report around what it actually means for each of the subsectors, so life insurance, health, general, and reinsurance. And I'll just give you a flavor of that because the findings there are some important differences within each of the sectors. So I think for life insurance, there is a fundamental need around redefining the products to become much more dynamic, much more personalized for consumers. A lot of the products today are in the set and forget mode, and I think we see that radically changing going forward. I think on the health side, there's already significant advances in leading players, not just giving you protection, but actually working with you to help improve your outcomes. So aligning incentives with services and offerings that help improve your health ultimately. On the general insurance side, there is a lot of talk about automated vehicles and the like that will happen. And whilst it's hard to question if that'll happen, it's a matter of time. I think in the nearer term, where there is significant opportunity is how do players actually better use data analytics to personalize products, to price them much more frequently, but then also move into a mode where you aren't just protecting your consumers, but you're actually helping them more actively manage their risk profile. And we start to see that particularly with SMEs and small businesses, many of whom were impacted quite heavily during COVID. It's incumbent upon the sector to not just give them protection, but actually help them better manage their risk profile going forward. I think finally for reinsurers, what we're saying is ultimately their business is being upended by fundamental changes that are impacting the risk profile of the sector. So be it, things like cyber, which are much more prominent, be it things like newer catastrophes that are much more severe, they've got fundamental things that they need to, redefine and reinvent themselves. The statement says that, InsurTechs, there are many opportunities for them to disrupt the value chain. And I think the reality is that a lot of the InsurTechs, they have already been disrupting parts of the value chain for a few years. And I won't sort of go through the names here. These are just a representative sample set, and there's hundreds more. But the point is that the first wave of innovation and focus and disruption was all around customer experience, distribution, marketing, engagement, because those are areas where insurance has been less advanced. These areas are also less technical, and there are learnings from other sectors that can easily be applied here. I think the next wave of innovation that we're going to see a step change in will actually be around products, will be a lot more around underwriting, where there'll be step changes in how quickly and how granularly can insurers actually underwrite. And we're seeing a lot of startups focus their energies here. The other element which is hidden here is, the first wave of innovation was, again, much more on the P&C side, so general insurance side, and a little bit on the health. I think we'll sort of see much more of a step change happening in the life side, which has historically been, more complex, longer term products. But we'll see that change happening there. So in summary, the roadmap that we outline for insurers and InsurTechs is, going forward, there's sort of 5 imperatives, and Mr. Chia and Mr. Kaur touched on a few of these. Firstly, is you always have to start with sort of the end customer in mind, and build this DNA within your organization to understand their hassles, to understand their pain points, and start gathering those insights much more regularly than you do today. Second is you've got to use those insights to start developing products and propositions that are much more dynamic and more personalized and evolve with customers' needs. On the distribution side, as we sort of mentioned earlier, there is this focus around integrating and adapting your distribution approach to better fit with the customer's needs, so you can serve them when the customers want you, how they want you, and through the channels that they want you in. I think fourthly, where we are seeing a step change is, and we expect more will happen, is the partnerships that insurers pursue to maximize value. So I think there's already been a lot of evolution around ecosystems, and insurers have been partnering with telco providers and other non-FS players, and we expect that to become much more systemic and to provide more value for the sector. And finally, I think, as was referenced at the start, I think the biggest change that the sector needs is around the talent and ways of working. And I think this requires bringing some talent in from outside the sector, but also breaking down some of the barriers that exist in silos of working. And so we believe, with these 5 steps, there is a fairly fantastic future for the insurance sector. One in which not only are customers' needs better met, but the sector can materially uplift its financial performance as well. So, TechU, I will stop the presentation there and hand back to you.
Thank you, Angad, for the illuminating presentation and the findings that you are sharing. I'll turn to Thomas Kuzik, who's part of AXA Insurance. Thomas, if you could introduce yourself, give us your first reaction to the findings in the report, and explain possibly to the audience that as a representative of a incumbent insurer, how would you see this impacting traditional insurers like AXA? Tom?
So thank you, TechU. So yes, My name is Tomasz Kuciak. I'm a Chief Transformation Digital Officer for AXA in Singapore. But here as well, I'm representing SFA and as a chair of the InsurTech subcommittee, where hopefully I can share some as well perspective from the other side of the table. So moving ahead quickly, the report, I think, on one side reconfirmed what we have all seen, people that have been in the journey within the insurance industry for a long time. That means that the transformation is happening. Insurance is changing to respond. Is changing due to the pressure that is actually applied by the customers, changing customer needs and requirements. Customer every day is experiencing a new type of the services, new level of services, new level of access in their individual life, doing anything, almost everything in their life, except when dealing with the insurance. So this definitely is a very important driver for the change. And second is this is, I think, where COVID helped overall, is breaking the most important barriers that often, especially in a more traditional part of the insurance, as Agnes mentioned, where we have seen as well less investment, which is life insurance. There were more reservations from both from the distribution channels, typically from the bank assurance, traditional agents, as well as the brokers, but as well as not enough readiness and skills to make the step change in terms of product, but as well as service delivery. And today, the reports confirm one more very important thing, which is the multiples. Traditional insurance have very high fixed cost structures that are not comparable with the digital native players. And this is one of the key areas of change, because this will drive the structural ability to invest more, be more agile and more flexible as well in terms of delivery, and capitalize on the investments into technology to innovate further. Thank you. Thank you.
Thank you, Thomas. Can I turn to Celine of Direct Asia, right? Celine, question for you, right? Direct Asia, went digital before the term InsurTech even came around. Can you share with us, can you introduce yourself to the team, to everyone here, and share with us the journey, the reaction to the report, right? And how you think that this will actually galvanize either the traditional insurers or InsurTech to actually become even more aggressive in this digitization journey. Celine?
Okay, thank you. Hi, my name is Celine. Currently, I'm in Bangkok. We are locked down, can't go back to Singapore. So I've been in Bangkok since March. I'm with Direct Asia, like Teck Yu is saying. Direct Asia is the first few digital insurer in Asia. So currently we're present in Singapore and in Thailand. Yeah, and I joined the company about 18 months ago, coming from a very traditional big insurers. So from your report and from what I have observed is this: technology and the availability of the data, whether it's our own data, third-party data, or data that you pull them together and create your own proprietary data. Those are already here. The technology and the enable us analyze is already here. So in Direct Asia, I think Angad, you point out very important thing would be is when it comes to underwriting and pricing. In Direct Asia, I can reprice every 2 weeks. Yeah. So from the data I get, I know which segment is good for me, which segment is not good for me. Because of our capability to reprice so quickly, we will be able to attract good customers, right? Customer buy motor insurance. In Singapore, we are still predominantly a motor player. Because we can price so quickly, we can attract good risk. And then the bad risk, if the customer want to buy from us at the price we want to charge, like they said, there's no bad risk, there's bad pricing. Okay, from actuary's perspective, then we push anti-selection into the market. Yeah, then we will be able to attract better customer, better risk, maintain a lower loss ratio portfolio. And then bundle with that would be is when it comes to operation side. Technology enable us, whether it's AI, whether it's machine learning, enable us to do a few things. So I'll touch on underwriting already. Let's talk about claims, right? So claim side would be is if you are motor insurers, your health insurers, all the time it's about dealing with our vendors, our providers, our partners. So I think most insurers are quite aware of over claims. So whether it's in health or it's motor insurance, we have those situations. Now with the data that's available to us, I can actually map out these claims versus my normal average. What is the outliers? So once I see outliers, I can push it into very senior claims assessor to look at it. So that also reduces my claims leakages, further improve my claims. And at the same time, these processes, my bot can work 24 hours a day. Operational efficiency is definitely kicked in. So I don't have, in Singapore, I have like less than 80 people managing my business end to end. Yeah. So I think all this resonate with me a lot. It's already here. Okay. And then as an insurer, I think what we need to do would be is with all those technology in place, we need to decide what are the use cases, how are we going to use them? I mean, having data is great, but having too much data and not knowing how to use it can give us indigestion as well. So coming up with that use cases are very important. Now, after we have the use cases, the other thing would be is partnership. Direct Asia is a very small company. We don't have that budget to build everything ourselves. So it's about choosing the right partner. So partners with whom? Distribution partner, technology partners. We even talk about product partners. Direct Asia is a specialist insurer, but our customer, they don't care whether you're life insurer or non-life insurers. They want to come to a platform, to a place where they can get all their needs fulfilled. So from my strategy, I cannot. So why not work with other insurers, other providers to provide those services in terms of partnership? Not just about distribution. So partnership is quite broad, yeah, to build that ecosystem. Then as an InsurTech, as a latecomer, okay, versus a big brand like the NTUC, the AXA, the Allianz, Direct Asia is brand awareness is very low. So when InsurTech want to enter into a quite saturated market or market with very strong incumbent, we have to pay a lot of attention on branding. Just because we have a good ecosystem and a good platform does not mean customer will buy from us. Customer still wanted to buy from trusted brand, right? Brand with credibility. Therefore, from an InsurTech perspective, I find that the incumbent insurer has lots of brand value. If they innovate, transform much faster, InsurTech has to run even much faster to be able to gain a foothold in today's insurance business. Thank you.
Thank you, Celine, for that. I think it's an interesting journey that you've done. And you touched a lot on the partnerships piece. I think that gives me a very good segue to introduce Tom Duncan, who's Head of Insurance for Grab. Tom, first of all, congratulations to Grab for getting a digital bank license. I'm sure that will actually give you even more breadth to do the things that you want to do from a partnership perspective, but from introduce the whole suite of services to your customer base. Again, Tom, your reaction to the report and how you see, Grab essentially, right, looking at these trends between insurance and the sharing economy. Where do you see your space going, right? Particularly as a insurance element within the super app or super platform that you have, Tom.
Thanks, TQ. So hi, everyone. Tom Duncan. I'm Head of Insurance at Grab Financial Group. So, I mean, two things jumped out at me from the report. First, I very much agree with the conclusion and the point made around customer centricity. And I think the opportunity for insurers, as well as the opportunity for insurer partners like Grab Insure, is more around a more integrated product and distribution strategy. So by that I mean, and I think similar to Angat's point, is that distribution tends to be looked upon quite in silos. So you might have your digital direct strategy, and then quite separately maybe an agency or banker channel, or even a partner like a Grab Insure. And really, actually, I think this ties in with the product strategy as well, where often products tend to be looked in quite siloed ways. So you might have, simple products like personal accident or travel insurance, through to motor insurance, through to health insurance, through to life insurance, but they're looked at in silos. And really, I think the ideal state for insurers and also for InsurTechs is really to be able to deliver both an integrated distribution strategy that really meets customers where they want to be met, as well as products that can take or that can go on a journey with a customer. So by that I mean some products are best suited for digital distribution, for example, travel insurance, and that could be someone's first experience with insurance. But over their life cycle or over time, they may then come to the point where they're looking to buy health insurance or life insurance, and they may then want some advice and guidance. And our research shows that as much as we're a digital first platform, people really do value that guidance and having their hand held when they're purchasing more complicated products like that. And so I think it's really the technology that enables that, rather than thinking about you have your offline channel and your online channel. It's really the technology platform that enables a customer to interact with you through digital for maybe a very simple product, through to then connecting with a human to talk them through a product, whilst you as the insurer or the distributor maintain that 360-degree view of the customer, so that you can ultimately go with them along their life journey. And I think you've seen some InsurTechs execute on this sort of strategy very well when you look globally. Zhong'an in China, I think, is a great example of that, where they started with very small, what they call scenario insurance products. And over time, they've introduced different and more complicated products, again, primarily digital, but also through some digital enabled agent sales channels. So I think when it comes to customer centricity, it really resonates with me when we need to start to think about more integrated product and distribution channels. The other thing that jumps to me on the InsurTech side is that, overall, I think the impact so far of InsurTech has probably been less than expected. Perhaps, I think InsurTech became a concept or a word or a term, probably 4 years ago, something like that, 4 or 5 years ago. I know it's been around effectively a lot longer than that, but I think that the overall impact of InsurTech so far has been relatively small. And I think actually that goes to some of the real strengths that the insurers have. For example, a lot of tech companies would love to build a recurring revenue model, a SaaS business model. Insurance companies have been doing that for hundreds of years in some cases, where they have customers that pay them sometimes thousands of dollars every year on a recurring basis. And they've really built a really strong moat based on that, especially say in the health and life space. And that makes it tough for challengers, for InsurTechs to break in and take market share there. And I think also a point Celine made really resonates is around trust. So even for a platform like Grab or other InsurTechs, to win that customer trust for an important transaction like a life insurance product or a health insurance product, it takes time. It will take time. You have to earn that trust. And I think many of the existing brands have that. So InsurTechs have those challenges to take on. I think also, as we migrate away from the initial focus around distribution, which has a lot of challenges around high cost of acquisition, competing against the existing players, and starting to look into spaces like product innovation as well, and thinking about tackling some of the challenges like longevity that exist, as well as things like the TPA space and claim servicing. That is also a point where customers really, I think, still face a lot of pain points. So for me, InsurTech is very exciting, a lot of opportunities. As an ecosystem, we certainly see that and are working with many great partners to try and progress insurance distribution. But I also see for InsurTechs an ongoing process of looking into different pain points.
Thank you, Tom. Tom, just a follow-on question, right? If you look at the entire insurance value chain, where do you hope to see InsurTechs becoming more involved?
Yeah, that's a great question. I think about that a lot. I mean, I think, again, just to restate, the distribution end of the value chain, although there are some really cool businesses out there, I actually think it's going to be tough to build a standalone sort of distribution entity into a huge business. Primarily actually because the moat that the incumbents have around that, that reoccurring value of in-force business and the way that they can leverage that. So I think distribution is tough, and really it's only those players that have been bold enough to go into full stack. So, often criticized, but the likes of Lemonade and Root and Metromile, their financials look tough and challenging, but they are having, I think, some of the most meaningful impact through to probably in China when you're seeing the likes of Zhong'an really building, now profitable and sustainable InsurTech businesses. So to come back to your question, I think the opportunities exist actually, and I think there's possible to build big businesses more in the TPA space. So how do you help insurers deliver much better claims experiences? And that's still a pain point that comes up a lot when we talk to our customers about what they need. So that's one area that I think there are, very big opportunities. And I know, and I've seen, there's some InsurTechs globally that are starting to focus on it. It's a little bit complex and a little bit less, I suppose it's a little bit more in the background, so to speak. But to me, that seems like a big opportunity. And then I do think, although this is where capital intensivity becomes capital intensiveness becomes a problem, is things like longevity. So how can we create products that will help people that are now living, the happy problem, I guess, of living longer, but when it comes to retirement savings and issues related to that. And I think the existing kind of mainstream products in many markets aren't yet addressing that issue. So I do see some potential there as well.
Thank you, Tom. Angad, if you're still there, one of the questions that InsurTechs have been asking, obviously, is that Singapore is a very, very small market. Where do you see the journey for them on a broader Southeast Asia perspective, right, in terms of development of the InsurTech ecosystem across Southeast Asia and the models that they would adopt as they go from a, I guess, mature small market like Singapore to potentially a big immature market like Indonesia? Angad, you may start with it, but I'm happy for all the panelists to chip in your views because I think this is a key question for the InsurTechs to learn from. Angad?
Thanks, Teku, and maybe I'll start and then others can add. So I think the first point is, in many ways, Singapore is a good place for InsurTechs, given the maturity of the market, given the maturity of the regulatory system, and in terms of the sort of the skills that they develop and learn by working in a tough market and working in a more advanced regulatory system, I think that'll put them in good stead when going to some of the markets where those elements and that infrastructure is perhaps not as advanced. The challenge for them is, as you sort of called out, is the scale may not be there, depending on sort of their ambitions and aspirations in terms of what they want to achieve. So therefore, many of them look at other markets where they can get that. And I think the thing that they need to trade off, in markets like Malaysia, Indonesia, Vietnam, and others is, whilst in some capacity the market and the growth potential is greater, and arguably you could argue that a competition is more or less, we've got a different view on competition, but the ability to grow is less because the insurance penetration rates are lower. They do need to sort of figure out to what extent is what they're doing scalable across the markets, because the markets are fairly different. And so there may be even like, the example that Tom mentioned around TPAs. There'll be elements of TPAs or components of it that actually are scalable across Indonesia, Malaysia, Singapore. But then there'll be many other elements which are specific to the market because of regulations, different product terms that you need to, customize. And so I think that's sort of the trade-off that many grapple with. And therefore, you don't see a lot of players that actually successfully scale up because it isn't as straightforward. So those would be my views, but happy for, I know all the other panelists have businesses that span multiple markets, so I'm sure they'll have views.
Yeah, thanks, Angad. Celine, it'll be good to have your views, seeing that you have started, essentially in Singapore and Thailand, but must have aspirations to go broader than that.
Yes. Yeah, we do want to go to expand to other ASEAN country as well. So from my learning would be is when it comes to the like I said, I'm pretty much a specialist in motor line business. Yeah. So when it comes to motor insurance, what we find, right, the quote and buy journey, right, is Singapore or whether it's Thailand, is pretty much the same. But I do agree with Angad as well. Will be certain part of that value chain due to regulation can be different. For example, claims processes very different in Thailand versus Singapore. Yeah. So what we do would be is we build repeatable cycle. We standardize our processes, our platform, so that we go from Singapore to another country. We don't rebuild everything. Yeah. We recycle a lot of what we have in Singapore. Singapore is like our lab. We do it in Singapore, right? Then we roll it out in Thailand. So it's always about repeatable cycle and reusing what we have. That will sort of make the setting up or rolling out to second country, the cost of entry much lower, yeah, and then the learning process is also much shorter. So my Thailand is we entered Thailand 5 years after Singapore. Thailand now is as big as Singapore. Yeah, so a lot of things you learn in Singapore, we just roll it out in Thailand, and you just try it, test it, A/B test it. It works, go ahead. Doesn't work, try something else. So I think it's that that learning and growing mentality, it has to be there.
Thank you. And Tom Duncan from Grab, your views, please, because given what Grab has done as an organization, this would probably be a good learning point for the InsurTechs, right? To get some tips from you guys.
Yeah, I mean, we've now launched in 6 markets, Grab Insure in 6 markets. And I think a few points on our learnings there is that for our very simple products that are especially linked to, say, Grab use cases, those have been quite repeatable across the different markets. So we've seen, similar uptake in Singapore and Indonesia, for example, and then we launched the same product in Vietnam, and we saw an even bigger, stronger uptake there. So I think something where you're talking about very simple micro products, which is a lot of our early focus. We have seen those as being sort of repeatable business models. So perhaps the main takeaway is just simplicity kind of works, whether it's a developed market like Singapore or in developing markets. That said, I think one of the issues that we've found is more around regulation. And just the simple or the core things of setting up entities, for example, or product filings or tech filings, very different from each individual market, and I think quite challenging for InsurTechs. I think Grab is, we're sort of lucky in Grab Insure to be working as part of an already very well established ecosystem. But I think certainly, starting from afresh and tackling the different regulatory environments in multiple markets in Southeast Asia would be challenging. And I do think that's that's something that stands in the way to some degree.
Thanks, Tom. And Thomas, as chairman of the InsurTech subcommittee in the SFA, why don't you wrap it up with your thoughts on this, but also to give us some concluding comments on where you see your leadership for the InsurTech community going forward next year, and how you would actually guide them in their journeys as well.
So let me start maybe with some few thoughts on the scalability and Singapore as a starting point and basically a trampoline for the other markets. So definitely Singapore is that's the prevailing concept, that if you can do it in Singapore, you can do it most probably in the other markets. But as we have seen from the fellow panelists, from both Tom and Celine, it's not so easy. And I confirm, working on the insurance side, it's not easy to replicate and launch the same product or even the offers or partnerships in the different markets. So it's so here I think what is very important is from the InsurTech perspective is to know that intricacies are important, and they will gonna slow you down. So the sales cycle will be long, and you need to partner locally with people knowing the market, knowing the ecosystem, to scale your product or your technology or your business into the local market. There are parts of the I would say insurance ecosystem that are less prone to the localization problem. Those will be typically things around the commercial lines, especially bigger risk. And that comes as well with a lot of opportunities, because if you look across the region, one of the biggest opportunities across Southeast Asia is, on one hand, it's really the underinsurance, and the second is all the risk around the climate or new type of the risk that today we can assess using the technology from satellite imaging to large-scale LiDAR deployments and things like this. That allows you to much better, with much higher precision, to assess the risk. That the risk is almost the same across the countries, and where the regulation at that kind of this part of the InsurTech insurance value chain is much lesser than when it comes to the retail or SME segments. So this is definitely one of the markets where you can gain the knowledge, access to the partners, especially given that Singapore is the big hub for insurance and reinsurance. And here, especially from this perspective, you can ability to work in Singapore with the partnerships, what I call it insurance or reinsurance as a service, where you provide the service, you focus on key value differentiator, while you try to outsource or partner with someone else that is doing much better for you in order to deliver value. So this is the area of opportunity, as well as new types of launching the InsurTechs within the region and out from Singapore to the other countries by partnering either with insurance companies or reinsurance companies to make sure that you can outsource the part of the value chain. Going back to the how we can help as a InsurTech subcommittee is definitely what we have seen through the discussion with the members, but as well as having the feedback from the people participating in the market, both on the insurance and the reinsurance space, that there's definitely a part of the gap within the InsurTech, understanding the intricacies. And that later on translate into the challenges when deploying, because you might not be as well versed about the details of the insurance or local market. So bringing this gap, partnering with the association and other bodies like LIA, but as well from in other countries to help bridge the gap, educate and give access, because sometimes it's people are really brilliant, coming with the ideas that everything works well, but what is missing is the one secret ingredient, which is the knowledge of the industry that I think we can help to bridge, and this will be part of the focus for us moving forwards to make sure that the ecosystem becomes much more vibrant. Fintech ecosystem is already huge in Singapore, and we are expecting that we're going to only grow, driven by the events like granting of the banking licenses that will attract definitely much more players into the Singapore to establish operation, build the centers as a springboard for the other markets. Now our role is to help people make sure that we are able to bridge the gaps between the traditional insurance, understanding of the market, and help them equip with the right tools, as well as the access to the market players, to grow and make Singapore right now is insurance hub, make it the big, equally big InsurTech hub for Southeast Asia.
Thank you, Thomas. I think this brings us to the end of our session. I'd like to thank Thomas, Tom Duncan, Celine and Angad for their presentations, for their views, and for Angad's presentation on this. I think the full report will be uploaded onto our LinkedIn, the SFA LinkedIn, and trust everybody could have a good read and provide any feedback that you want. I look forward to working with all of you again and working in the community to actually make sure that the journey of both insurance companies, right, in whatever form, as well as the InsurTechs, right, and like Thomas said, make Singapore, an even bigger insurance and InsurTech hub. Thank you very much.
Thank you.
Thank you to all our panelists and speakers today for this illuminating panel. We hope you've enjoyed this session, and we will see you later at 5 p.m. for our final session of the day. Thank you very much once again, and see you later.